Hello and welcome to Getting Your Money's Worth, the show that focuses on value. I'm Judith West and our guest today is Michael Woolfolk, Senior Currency Strategist at Bank of New York Mellon. Hi Michael, and thanks for being on this show. I already know it's a very busy day for you. What did you tell me? I'm number 3 in TV interviews and you have 2 more to go and radio. Well,
right.
As I say, I'm happy that I'm right in the middle. You still have some energy left for us. Anyway, so I want to get into what we do for a living, but just explain to us very briefly, what does it mean to be a senior currency strategist?
Yes, well, I work with a trading group in my bank that provides foreign exchange services for our clients. We have a bank, 40,000 employees. We're the largest global custodian.
I think you're the largest, right? Yeah.
We are.
So you help people that want to trade currencies.
That's correct.
Okay, so that's more esoteric than we want to go. Mm-hmm. But because I want to be prepared for you, mm-hmm. I went online today to see how our almighty dollar was doing. Yeah. And I saw that, oops, dollar's down, euro's up, sterling's
Correct.
up, gold is down.
Yes.
So tell me something. I said the almighty. How is our dollar? Is it still the premier currency in the world?
The dollar has never been more stable,
never
been more influential now than ever before.
But what about all this we hear all the time? The dollar's down, the euro is up, it costs more to go. Should we be alarmed as American consumers about that?
Absolutely not. It is the very nature of foreign exchange markets to fluctuate. And in a normal year, we see the dollar or any other flexible exchange rate move up or down by 10%.
Yeah. So does it mean that China's getting a stronghold on us?
Oh, by no means.
By no means.
Yes.
But you know, it is confusing.
Yes.
It is confusing. There's so much talk all the time. If we're as strong as we ever were, and we don't have to worry about it, why is there so much press about it all the time, Michael?
Judith, right now is an ideological clash occurring. And it has reached really a head at the G20 meeting in London this week.
Which is this European Economic Summit.
That is correct.
Now, the G20, they pretty much control the entire world's GDP, right?
They represent approximately 85% of global GDP. That's correct.
Which is our gross
domestic
product, right?
Yeah. Mm-hmm.
So that's a pretty influential meeting.
Very much so. Yes.
And I know it just seems, just in the press again, I don't know how much to believe, that the U.S. is not quite as boisterous or as powerful as we have been in the past. Is that true?
That is certainly true, that the U.S. no longer represents as large a proportion of total GDP, global GDP, as it once did, or global trade. But we have to really take some solace in that and comfort, because we're allowing other countries to help themselves, and in the process of providing U.S. consumers with cheaper goods.
So the fact that what does it mean for the fact that the dollar is down? Does that mean that goods cost us less?
Well, the dollar
what's the relationship there?
The dollar is down today marginally. It's certainly stronger than it was before this onset of this crisis. Right. But yes, when the dollar is weaker, clearly it costs us more to travel abroad. If we want to travel, let's say, to Japan or to Europe, it costs a bit more. It means that it will cost more money to buy goods made overseas. However,
do imports cost us more?
Correct. Yes. However, the Chinese have had a relatively fixed exchange rate. The yuan has been relatively fixed against the U.S. dollar. So, although the dollar is weaker against the euro today, it is maintaining its value against the Chinese yuan. So, it won't be more difficult for us to buy all those Chinese goods.
Does it have any relevance for the price of goods in the United States?
There is sometimes an impact. We have so many goods we import that, and typically at a cheaper price than what could be these goods could be manufactured here, that local manufacturers don't have any pricing power. They can't raise the price of goods as they would. Those that produce services in our economy rather than goods, however, have a better ability to increase prices to pass along costs.
To pass along domestically.
Correct.
Yeah, but manufacturers, which I don't know why manufacturing is sort of an oxymoron in this country anyway. There's so little of it going on, myself included. They have a harder time when the dollar's down. Or they have a better time?
They actually have a better time when the dollar is weak, because that means that our goods from a foreign perspective are cheaper to buy. It's easier for Japan, Europe, Canada to buy our goods when the dollar is weaker. It's generally viewed as positive for exports.
What is the relationship between how stocks do and the value of the dollar? I often see the two kind of tied together.
Well, they are tied together. Unfortunately, they're not consistently tied together. Sometimes they're positively correlated, meaning when the stocks go up in price, the dollar goes up in price. That's the traditional relationship, that if an economy is doing well, the stock market of that country is performing well, and its currency goes up in value because there's an inflow of foreign investment into that country to take advantage of the returns to be had there. Conversely, when the economy is very poor in recession and the stock market is going lower, people pull out of that market. Foreigners pull their money out of that market and create selling pressure for the currency. That relationship doesn't always hold, particularly when it comes to the U.S. dollar. The dollar has become the safe haven amongst foreign investors. This is where, if you get out of stocks and bonds internationally and you have cash, you want to keep your cash in U.S. dollars, even if you're not an American.
So internationally, yes, the dollar is still safe haven.
Correct. Right. It's interesting because we have these large twin deficits where...
Right, exactly. And we're sort of also depending upon these foreign assets to support our borrowing. So it's kind of at odds with each other.
Yes. It's an interesting question when you ask why. I mean, ours is the only government that explicitly states that it supports a strong currency policy. We say a strong dollar is in our best interest. Yeah. It's in our best interest because it supports foreign investment, it keeps inflation low, and it keeps the status quo with respect to the U.S. dollar. There's no other currency like this.
It's also a nice piece of status. You want to feel, that you live in a country where your currency is on planet Earth is the most important.
It is heads and shoulders more important than any other currency. It is at the global center of the monetary system. It represents 2/3 of all central banks' foreign exchange reserves. It is involved in over 90% of all foreign exchange transactions. Wow. You can't even move money within NAFTA from Canada to Mexico without going through the U.S. dollar. You have to sell Canadian dollars, buy U.S., and turn around and sell your U.S. dollars and buy Mexican pesos. That's how important this dollar is. All of the commodities traded in the world are denominated in dollars. So
oil, everything?
Absolutely. Gold is valued in U.S. dollars and crude oil. If Saudi Arabia wants to sell its oil to Japan, Japan has to sell its yen and buy U.S. dollars to purchase that oil.
Oh, really? That's interesting.
And so it's a very unique
That must be a crawl in everybody's throat, Middle East throat, if they have to do it with dollars.
The unintended consequences of all this is that we're allowed to have larger deficits than we would otherwise if we were another country. So it allows us to spend more money, deficit spend, and our growth rate, our average growth rate, and our average employment rate is actually higher than it would be otherwise. So it's a very important status to
right. So even though we think we're in a big economic debacle here, as far as our currency is concerned, it's holding, and beyond.
Correct.
What is this business that I've been reading about where some of the countries, France and maybe Germany, I don't know, some of the others, want a different kind of global currency? In fact, our own Secretary of Treasury, Geithner, got himself in a little bit of trouble by saying maybe it's not a bad idea. That was pretty surprising to most of us. What is all that about?
Yeah, this was a relatively new development in the lead up to the G20. 2 months ago, Russia had proposed an idea, and it had been shifting its reserve assets out of U.S. dollars into euros.
Oh, really?
Its relationship with Europe is very important, and it did not want to be overly weighted in terms of its foreign exchange reserves with dollars. It has approximately 50% of its reserves in dollars. And also, with the new administration, there is a lot on the table diplomatically. And as a trading chip, they know very well that this is an important point for us, the dollar status. So they propose that maybe we should change it.
Almost like a bargaining chip.
A bargaining chip, exactly. And certainly what the Russians and the White House administration have been talking about are disarmament treaties and many other issues. So China has backed this proposal and has gone one step further and said, well, you know what? There's this kind of antiquated notion called SDRs, or special drawing rights, which is really a throwback to the gold standard era, in the late gold standard in 1968, 1969, the IMF.
So they sort of they encouraged it.
They encouraged it, absolutely. In fact, because of their intervention to keep their currency weak, they have all these U.S. dollars that they've purchased. Right. And now they're complaining that all of their reserves are in U.S. dollars, which is a little bit disingenuous, according to Paul Volcker, who's one of our who's a
good expert. So I think the Treasury Secretary quickly backed off that it might be a good idea.
Yeah, he said that, look, I haven't read PBOC's Governor Wen's Zhu's comments directly. I haven't read his statement. However, we're generally supportive of the expanded use of SDRs, and that's what's on the table today. Is that there apparently the IMF SDR arrangement is going to be increased somewhat.
We read that the IMF is the International Monetary Fund.
That's right.
And the SDR, but getting back to where we live. And to our world here,
sure.
And kind of as a summary statement.
Yep.
In a brief statement, how much credence should Americans pay to all this conversation? Is it just typical nation bullying, or
there's a lot going on in the international stage right now.
Is it my turf, your turf kind of thing?
There is no realistic threat to the U.S. dollar.
Right.
The idea that SDRs replacing the U.S. dollar is not
going to happen.
It's just simply not going to happen. It's a very flawed idea to begin with. Talk about a global currency is even more flawed. So the American consumer need not worry about that. The dollar will remain important and a store of value for the coming future.
And our show is getting your money's worth. So does that mean that American consumer can go out and spend their dollar and know that they're getting 100 cents of value on the dollar?
I think that they can do so, and rest assured that others can do the same. 2/3 of our dollars are held overseas, and that only demonstrates how important
strong. Well, it's good to know that we're still #1. Sometimes I get a little worried. Thank you so much for being on our show, and stay in there. We're depending on you. All of the viewers are depending on you to keep that dollar strong. Thanks, Michael, for being on the show.
Thank you, Judith.
You're watching Getting Your Money's Worth with Judith West and Michael Woolfolk, Senior Currency Strategist at Bank of New York Mellon. Thanks for watching.